Hello, everybody. I'm very happy to be here. And let me start with one very simple but very, very important question. How do you think? Who has the best marketing? Apple? Coca-Cola? Any other ideas? Facebook? Great. So my point is that marketing itself has the best marketing. And it should be very logical and understandable, like top-rated Big Four audit companies should have their financial reports in the best possible shape, yes? IT companies should have the fewest problems for their internal networks, yes? Like sales consultants should sell their product in the best possible way, and so many other examples. And what about finance? Actually, as you know, we have three main directions in business education: finance, marketing, and management, yes? And we did research, and our main question to our sample group was the following. How do you think? What is your perception? Which one from these three directions, which one is the most creative one, which one is the most charismatic one, and which one needs to think outside the box most of all, yes? And to exclude some kind of biases, in our sample group, we did not have any person related to these three directions. And here we are. What kind of results we received? 88% of our sample group thought that this is a marketing. Thought that marketing itself is the most creative one, you know. And 12% believed this is management. You can already guess. For finance, we have remained only 0%. Can you imagine it, 0%? Actually, to clarify, it does not mean that nobody considered the finance, but number of this kind of answers was so small that mathematically it is equal to 0. Yeah? And first time when I saw these results, my first impression, my first finding was that for sure, finance needs just more marketing. Yeah? Today I will illustrate several comparisons between marketing and finance, why marketing has such a good level of marketing and what's the problem with finance. I will start my discussion with comparison of markup and margin, and let me give you one precise example. Company has something which was for 100 euros, okay? And company sold it for 125 euros. What was the profit? Easy to find out, just 25 euros, yes? But in terms of percentage, what was the profit? That's the question, and here we are. Marketing and finance will compare the situation from completely different perspectives. So marketers will generally calculate how much this 25% was comparing to 100 euros, yes? And this is 25%, because marketers will assume that because of good marketing, it was possible to sell something for 125 euros when it cost just 100 euros. Yeah? So 25% will be the profit. But what about finance? Finance will be more conservative and will calculate that the most important issue is that we sold it for 125 euros. And from this 125 euros, what was our profit? Again, 25 euros, yes? But if we calculate 25 euros comparing to 125 euros, and this is gross margin, of course, the result will be 20%. Yes? So for exactly the same situation, marketing told us that our profit is 25%, and finance told us that our profit is 20%. For exactly the same situation, unbelievable, yeah? Next example is comparing some kind of expenses. Let's say, generally speaking, whenever marketing department has some kind of expenses, generally these expenses are estimated like net amounts, yes? But if we have to pay some maybe taxes on these net amounts, of course these taxes matter very much, yes? And finance people will for sure consider all, including taxes, all gross amount for expenses. Again, for the same situation, completely different understandings from these two perspectives. And my final comparison today will be, let's say, what kind of terminologies do we have in marketing? A lot of them, but here are just several examples, like 4P, like CRM, like B2C, B2B, and a lot of others, yes? And when I thought about this kind of terminologies, I found it out in myself that these terminologies are like very good brands for themselves, yes? like very, very sexy brands. But on the other hand, what do we have in finance? In finance, we have something like acid test. Acid test, unbelievable, yeah? Okay. At the same time, I was very curious, what kind of jokes do we have about marketing and what kind of jokes do we have about finance? And here we are. This is 10 funny jokes only marketers will get, and even the name has very good marketing, yes? And one of the jokes we had in this article was the following. One marketer is telling to another one, you know, my accountant asked me how much salary do I have? And I answered her, 2 cents per 1 click. Very cute, yes? And what about finance? Here is the one from my book, from Financial Analysis in Practice, and the joke is the following. There was one very successful company, and in this successful company there was one chief accountant, and she was considered as a very good employee and worked for this company for several years, so was very successful, management appreciated her, but had just one very, very strange habit. And the habit was that each and every morning, this person went to a secret screwdriver, opened it, looked in it, did not take anything or did not put anything inside, just looked in it, and only after that started the work. So for sure, everybody was so curious what's happening, what's the issue. And after some years, they found it out. The issue is that there's just one paper, the big paper in this secret screwdriver, and it's indicated debit is on the left side and credit is on the right side. So even in terms of jokes, if you compare even jokes about these two disciplines, even in jokes we have unbelievable big differences, yes? So finance definitely needs just more marketing. According to our research, people's perception was that finance is very straightforward, very boring. You don't need thinking outside the box. And I want to illustrate why finance is not straightforward. It's very important for me as a finance person, yes, for sure. So first comparison will be corporate finance and financial reporting. Corporate finance, you will agree with me, is one of the most important directions in finance. And corporate finance gives us the rule that you cannot make the sum of 2 or more different amounts if they are on not the same timeline, yes? And this is a very important rule. But on the other hand, financial reporting is telling us that, for example, if you are preparing the financial report, let's say profit and loss statement, you have to make the sum for each and every month, for each and every expenses for the whole year, yes? So again, different perspectives. If we compare financial and tax reporting, they can be completely different. And in terms of both of them, you have to make a lot of decisions. You have a lot of flexibility, and it's not at all straightforward. Yes, it depends on many issues. And managerial reports, this is my favorite example, because you don't have any kind of regulations, any kind of rules or principles whenever you are preparing the managerial report. And you have to be very creative to develop the one which will be very helpful for better decision-making process. You have to think outside the box. You have to consider what include, how to include, and what exclude from the calculations. So without any kind of limitations, you have to be very creative. Of course, it's not as straightforward. Okay, but just finance needs better marketing. At the same time, I will give you one example why finance definitely needs thinking outside the box. And I will illustrate this important question for me just based on one formula, which is very important in finance. And maybe a lot of you know about it. This is return on equity, and this is net income divided to equity, which means if we want to know how much net income company generated in comparing to its equity, at the one hand, it seems to be very simple, yes? Because we have just one number in the numerator and one number in the denominator. How it can be more simple, yeah? Just one number and one number. But on the other hand, you have to consider a lot of different issues to analyze this simple formula. You have to be thinker outside the box to consider many, many issues to find out what's the real economic understanding behind the formula. And let me tell you why. Because, for example, which equity do we have here in the formula? Is it the one which company had at the beginning of the period? Or is it the one which company had at the end of the period? Or maybe the average of these two? Yes? At the same time, what kind of financial standards company is using whenever prepared the financial reports? Is it international financial reporting standards, IFRS? Is it generally accepted accounting principles? Or maybe it is international financial reporting standards for small and medium enterprises, and a lot of different, yeah? And it makes a big difference because many issues can be differently and can affect net income and equity, both of them. At the same time, for example, what kind of decisions management of the company made related to inventory methods, related to depreciation methods, related to reserves, how reserves are estimated and calculated, related to leasing decisions, and a lot of others. So many decisions can huge impact on net income and on equity, on this simple formula, yes? At the same time, for example, what kind of policy company has for dividends? Let's assume that we are comparing two companies and want to understand which is more attractive in terms of return on equity. If we want to consider both of them, compare both of them, we have to consider very important issue about dividend policy. Let me give you an example. If one company, just before the end of the period, declared and paid out the dividends, what happened? Net income remained the same, but equity decreased. Yes, because retained earnings decreased. It means that in this formula, if equity is the same and if net income is the same and equity has decreased, it means that return on equity, of course, got it more attractive. Yes, just because of dividend payment. Maybe another company is more attractive, but because of this just one decision, the first one seems like to be more attractive. And a lot of other perspectives. So you have to very creative, have to consider a lot of issues, even for this one simple formula. At the same time, don't be afraid, we will not discuss in details. Just very briefly, maybe some of you know this is DuPont analysis, which is a very important tool for understanding return on equity, structure of return on equity. What drove return on equity? Was it return on assets, or was it just financial leverage? So just to give you an idea, we have to consider everything we have here on this diagram to understand this very easy formula we started to discuss. Yes, Roy? Okay, I tried and probably and hopefully illustrated why finance definitely needs thinking outside the box and why it's not the straightforward discipline. But at the same time, I want to show you what can happen whenever finance finds some tricky marketing. And I will give you an example, the real one, which happened in 2013 in Georgia, where I am from. And it was some new loan one bank introduced at the market, and the loan was very successful. It was very successful. And down payment was 8%. It was not ordinary annuity, but it had promotion like it's for 8%. And comparing to the market, on average, it was something like 13% during this year on the market in Georgia. So it seemed to be very attractive. And the issue was that, for example, if you wanted to take 12,000 euros, for this 12,000 euros, you had to make the payment as a down payment 8%, which is 960 euros, and the remaining amount you could take, and etc. If the product is for 1 year, it means that for 12 months, you had to pay the same amount, which is 12,000 euros divided to 12, 1,000 euros. They stated that they did not have any other commission, no penalties, no commissions, and on the market there were a lot of different commissions and a lot of different penalties for any kind of loan. So the product was something different, and it was very, very popular. But what is the issue? The issue is that if we can calculate what is the effective rate for this particular loan, and it's very simple. If we calculate this is almost 60%, even more than average market rate we have on the market, but it had good marketing. And because of good marketing, it was very attractive, very popular, and a lot of customers use the loan. Yeah? Why the effective rate was so different? Because in the product we had the initial payment, yes, and it was not ordinary annuity. And more interesting thing about this product is that they stated that, you know, if you make any kind of prepayment, it's okay for us, we will not penalize you. Yeah? On the one hand, it seemed also very interesting because for other products, if you made some kind of prepayments, it was some 2% penalty. In this case, no. But if we understand the product, it was only for their benefit if we made the prepayment because all the interest expense was already paid, yes? Even in the best case scenario, if I take the loan today, I made all the 8% payment out and I, with prepayment, just cover the whole loan tomorrow, it will be the best case scenario, yes? For sure. Okay, my point is that here, according to the promotion, of course, this marketing did not share the whole information to the market. Yes, it was not the whole picture. It was not 100% true. But personally, I believe that this is very often when we are discussing something about marketing. Yes? Okay, my next point is that not only finance, but financial people also need better marketing. And to be perfectly honest, that's why I'm here today. So, vielen Dank.